Hi there. Today we're going to talk about interest rates and what's happening in the marketplace with those interest rates. You may see a lot of different things happening in the media today, and a lot of things are going crazy, and people have a lot of questions. So today I have brought on the channel a very great specialist on mortgages. This is Lino Contento. Now, Lino has been in the industry since 1987. He was with RBC for 24 years, where he was the #1 mortgage specialist in all of Canada. Right now, he does over $300 million in funded business, and he's a #1 with mortgage architects in Canada. So, Lino, tell us what's going on.
Perfect. Thank you, Marcy, for the introduction. Let's talk interest rates. Number one, central bank policies. Bank of Canada set policy interest rates and use monetary policy tools to control inflation and support economic growth. They tend to raise interest rates to curb inflation or lower interest rate to stimulate buying. Example, COVID. Number two, economic conditions play a large role. Strong growth can lead to higher rates. Low employment rates can put upward pressure on wage increases, leading to inflation and price increases. Inflation has a large impact on interest rates. Higher rates can help reduce consumer lending and borrowing, thereby cooling off inflation. Supply and demand of real estate, inventory, global economic conditions, and currency exchange rates. These 5 factors are the factors that would primarily impact interest rates. What is happening with interest rates currently? The current focus for the Bank of Canada is bringing inflation back in line with the targeted 2%. The Bank of Canada is anticipating to cut rates by up to 2% over 2024 and another 1% in 2025. In the short term, we're predicting the Bank of Canada will hold the policy rate steady at 5% to the end of 2023. However, please note that Bank of Canada has surprised us with hikes in the past. But I'm very confident we have come to the end of the increases. Fixed rates are determined more so by bond yields. When bond yields rise, fixed mortgage rates tend to rise as well. All in all, I think now is the time to buy where housing prices are lower, as it is a buyer's market. Once rate decrease, housing prices will continue to go upwards. What interest rate should I get? I believe 5-year variable close is the way to go at this point. Once rates head downwards, you will benefit. However, if you're not comfortable with a variable product, short term, definitely. These are all items that we can discuss on a free discovery overview.
That's great. So you're thinking that if a person is getting into a new mortgage right now, they should be looking at a variable rate mortgage.
So Marcy, you get into a variable rate mortgage when the mortgages are high, when the rates are high, not when the rates are low.
Okay, that would be contrast to what a lot of people think, wouldn't it?
Well, watch. If you get into a variable rate mortgage when the rates are low, there's only one way to go, and that's upwards.
Right.
Now, if you get into a variable rate mortgage when the rates are high, again, there's only one way to go, and that's downwards. So now, considering that they have made so many increases over the past, year or two, there's only one way it can go. And if you're into a variable, you're going to obviously benefit from the decreasing rates. I do not believe that you should be locking in long term. Absolutely under no condition.
Okay. What would be the longest a person should be locking in right now?
3 years.
Okay.
That's the maximum that I would consider.
Right. Okay. And what's your guess on what's going to happen in October? Because we're hearing a lot about another increase.
I think, as I mentioned previously, I think they're going to hold still.
They're going to hold still. So you're not really expecting another. I mean, it's always a magic ball, right? But you're expecting you're going to hold still. We don't know for sure what's going to happen.
Bank of Canada surprises us all the time, like I said, but I don't think so. I don't think it's going to happen. And especially because, let's not forget, 2024 is an election year.
Right. That always makes
a lot to impress.
So should a person be buying this fall, or do you think they should be waiting till the spring?
I wouldn't wait another day.
Okay.
As a matter of fact, I am personally in the market all the time right now.
Okay.
Because again, whatever you purchase today is probably $100,000 to $200,000 less, all depending on the size of the home, due to the raising rates. As
Right.
soon as they start downwards, housing prices are going to increase.
So
So
we've got a little bit of a window right now. So you're thinking it's a great time for buyers to be jumping in. Because what I'm seeing is a lot of buyers sitting on the sidelines right now. I keep hearing words like, oh, the market's going to crash. I'm going to get a better rate in the fall. I've heard people say that they think that interest rates are going to go down and the housing prices are going to go down. What's your thoughts on that?
here's an interesting factor. How many power of sales do you see?
I haven't seen too many.
Yeah, there's not that many. And yet they've increased rates, what, 5, 6, 7, 8 times? There's a lot of money out there, Marcy.
Right.
There's still a substantial amount of money that Canadians are holding on to.
Mm-hmm.
And there's no concern. I mean, we're hitting rates of 6 to 7%, and yet people are not losing their homes.
Right. And why
Right?
do you think that is?
Because the affordability is there. The affordability is definitely there. There is money. There's money that people have had saved up, and there's other means. So people are hanging on to their homes. So
Right.
I do not believe that there's going to be a crash in the market.
Right. So if there's no crash in the market and the interest rates are probably going to hold steady, this is probably, and the prices are actually down. We all know there's been a little bit of a
Of a
change.
correction.
Yeah, a little correction the last few months. I'm seeing, depending on the area, like you said, $100,000 to $200,000 down. Especially I'm seeing a lot in cottages right now. So if you were a person in the market for a cottage, would probably be a good time to get in. What do you think
Right.
about that?
And that's exactly what I'm saying. Like if there is
Yeah.
that correction that happened over the past year or two, you're going to benefit from that correction.
Right. Right.
So short-term loss for long-term gain.
Right. So don't be afraid of the price right now. The price is in your favor. The rate's going to come down. And if you were a new buyer, does this still hold true for you?
Absolutely. And again, going back to the variable product, if
Mhm.
you're buying low and rates start to come downwards,
Mm-hmm.
basically it's a win-win, right? There was a short window that you paid a little bit higher on a rate, but you got into the market at a lower purchase price. And then eventually, a year or two from now, as rates start to decline, you're going to benefit from the lower rate on something that you paid $100,000 to $200,000 less on.
Right. Now, Lino, that's just gold. That is just gold
I
information.
think
I think
so.
people would really appreciate hearing about that.
Yeah, I think so.
Mm-hmm. Okay. Any other comments you wanted to make about these interest rates?
No, let's see what happens in October, and
Okay, that
perhaps
sounds
maybe we
good.
can do another one of these in October just to see, where it is that we stand and how true my prediction was.
Right. We will definitely do that. Okay, folks. So this is Lino Contento. He's with Mortgage Architects, and I'm going to put his information down below. So if you want to get an evaluation or you want to chat with him and see what you should do and what next steps you should take, go ahead and contact him. Thanks so much, guys. Okay, thanks,
Thank
Lino.
you. Thanks, everybody.